The Japanese Nikkei index has finally broken out of a multi-decade base that had been forming since the early 90s. As well, news of coronavirus vaccines has investors looking to recently neglected areas of the market. But this isn't the first time that bullish attitudes have started forming around Japan. Actually, back in 2017, we saw a similar price breakout, and on Real Vision, we covered this in The Big Story. It's a mini documentary series where we looked at specific topics from multiple angles. Well, as you can see from price, we basically top-ticked it with the release of this back in 2017, and since then, it has been much of the same for Japan and actually moving back into that base. We've broken out again, and that's why eyes have turned back towards Japan. And it's up to viewers to decide whether they were early or wrong. And this is going to be another false breakout or the beginning of a bigger move for the Japanese economy. With that being said, I hope you enjoy this archive piece looking at the big story on Japan.
Then there's Japan, very sad case.
Japan is just a horror story, because of demographics and debt.
It's the government that I have issues with.
Abenomics hasn't delivered what it promised to deliver, which is 3% growth in nominal terms.
So you get one shot to change growth and inflationary expectations, and they fail.
It's a can of worms.
Well, this is going to end badly when it ends.
My name is Cindy Ponderbud, and I will be hosting this segment of Real Vision Television, exploring Japanese markets. I've been investing in Japan and Asia for more than 20 years, primarily working at some of the world's largest hedge funds, including Moore Capital and the Rohatyn Group. I'm currently working for View from the Peak, which is an independent research firm based in Hong Kong. We focus on macro and thematic research across geographies and asset classes. A quarter of a century ago, Japan was the envy of the modern world. Its global exporters were household names, its banks were financial titans, and remarkably, the Imperial Palace, which is in downtown Tokyo, was believed to be worth more than the state of California. As we approached the end of 1989 and the Nikkei approached 39,000, the market peaked, rolled over, and would never see such levels again. The bursting of the real estate and the equity bubble would be devastating for the Japanese economy and for the Japanese population. Crippled by an aging demographic, high levels of debt, and a deflationary mindset, the government tried repeated fiscal and monetary policy, but to no avail. Thus, a lost decade became 2 lost decades. We're going to talk about the background of Japan and have 3 guests who can give us a unique view on what they've seen Japan's problems being in the last 25 years, what is changing, and what might be the opportunities. Our guests include Mr. Alex Kenmont, Mr. Jesper Koll, and Mr. Brian Cordarolo. Jesper Koll is a longtime Japan bull. He is currently right now very optimistic about the demographics of Japan, corporate restructuring, the changes in corporate behavior, and has some very interesting data on the amount of cash that Japanese companies are holding.
Japan's companies just broke a world record. They have the most amount of cash on their balance sheet, compared to any other country in the world. It's, more than 140% of GDP equivalent.
Hi, I'm Raoul Powell. Sorry to interrupt your video, I know it's a pain in the arse, but look, I want to tell you something important. I can tell that you really want to learn about what's going on in financial markets and understand the global economy in these complicated times. That's what we do at Real Vision. So this YouTube channel is a small fraction of what we actually do. You should really come over to realvision.com and see the 20 or so videos a week that we produce of this kind of quality of content, the deep analysis and understanding of the world around us. So if you click on the link below or go to realvision.com, it costs you $1. I don't think you can afford to be without it.
Is just held in cash on the balance sheets, but the structural story is more interesting. You've got in Japan an endogenous force for an increase in the purchasing power of the people. And that's what's important. It is this demographic sweet spot, the fact that the labor market is improving, that the quality of jobs is improving, the purchasing power of Mr. and Mrs. Watanabe is going up for the first time in 25 years, and that gives me a domestic demand cycle that is very positive for small and medium-sized companies. You know, this is a great time to re-engage in the Japanese stock market. And the reason is very simple. Corporate Japan restructured. Corporate Japan is now very competitive and very, very profitable. Companies are profitable even when the economy grows by only 0.5%. And as a result of that, the visibility of corporate profits in Japan is fantastic, and this is still a great time to engage in Japan.
Brian Cordarolo is currently the CEO of Rikon Asian Macro. He has extensive macro experience working for such firms as Moore Capital, Brevin Howard, and Graham. He specializes in Japanese and Asian macro investing and has been looking at Japan for more than 20 years.
I think Japan is a phenomenal story for investors. I think you're seeing a continuous streak of growth, which looks set to continue. I think the productivity story is still flying under the radar, but as it's increasingly revealed, foreigners who've been absent from the Japanese share market for the better part of 3 years are going to come back and be net buyers to push us through long-term resistance.
Alex Kenmont has been in Japan since the 1985, so has experienced the Japanese global bubble. He is currently the CEO of Milestone Capital Management, which specializes in small cap company investments. He is a well-renowned expert on Japanese politics and has a very unique perspective on the combination of macro trends and micro developments in Japan. He seems to be of the belief that Japan isn't suffering from corporate malaise, that what has been holding back Japanese companies over the last 25 years is restrictive monetary and fiscal policy.
All of the things that that are required for Japan to do better are already in place. It isn't true that Japan is structurally so completely damaged that it can't grow. It's grown quite nicely for the last 2 to 3 years, and the reason that it's grown quite nicely is the combination of the yen being somewhat weaker than it's been for most of the last 30 years. And an absence of policy error on the part of the government. But the combination of deflated wages domestically and a very, very low, finally, a reasonably priced yen is an unbeatable combination. And that will, in due course, excite attention from international business and from domestic business. And it will be linked to a very small scale initially and eventually a large scale rise in capital investment in Japan.
I agree with Alex's opinion that all the actions to make Japan a better place were taken. How is this represented in topics? Let's hear what Mark Newton has to say about that. Mark is a technical analyst and TV regular.
Yeah, I just think Japan is a compelling opportunity for an intermediate term investor to take a look at. At a time when many global indices have already peaked out in 2015, Japan seems to be doing exactly the opposite. You know, we've seen China, we've seen Europe, we've seen a lot of these world indices peak out, and really that happened coinciding with Japan bottoming and starting to move higher. So oftentimes these initial moves off the lows tend to happen amidst a global period of real skepticism, and I think that we still haven't gotten to the time when we've really begun to embrace this rally for what it should be. So I tend to be very optimistic going forward on Japan.
Abe initially came into power in late 2012 on a wave of populism and promised to end Japan's deflationary spiral. He initiated a three-arrow economic policy that sparked a reversal in the equity market. How has Abe and Abenomics worked out for Japan?
In politics, Japan has done a complete about turn. You remember over the last 20 years, basically, before you blinked, there was a new prime minister. Before you blinked, there was a cabinet scandal. Politics over the last 20 years in Japan was very unstable. Now, exactly the opposite has happened. You find that Prime Minister Abe is one of the most secure leaders of the advanced world.
Mr. Abe's reincarnation as Prime Minister ushered in a period of yen weakness without parallel in the last 30 years. One way or another, and it's very difficult to identify all of the strands that made up the situation, but one way or another, he presided over the end of the Plaza Agreement regime governing the yen. Mr. Abe's contribution is that he provided an international framework, his identification with the United States strategically and so on, all different aspects to it. But he provided an international framework in which a maxi devaluation of the yen was possible. And the second thing is that perhaps Mr. Abe is politically powerful enough to prevent the repeat of the fiscal tightening and monetary tightening, which has been premature so many times during the last 30 years.
Well, I think for all of us, it's been policy implementation, the actual ability to get things done. Three Arrows policy has been fascinating for really anyone who's focused on Japan from an economics point of view. And the first two arrows that were fired on monetary and fiscal were relatively easy to understand. The third arrow, with all of its, grand visions about how to change and reform the economy and make it more innovative, that's something that could possibly be Abe's legacy, depending on how that develops over the rest of his term.
The lesson learned from the lost decades over the last 20, 30 years is that both monetary and fiscal policy were tightened far too quickly. You always had these boom-bust cycles in the Japanese system because the moment the economy got going, they thought, oh my God, we got to hike taxes, we're going to have to consolidate the fiscal system. Now, Prime Minister Abe has learned the lesson and continues to push on the accelerator, both on monetary policy and on fiscal policy.
For equity investors, we've reached very interesting technical levels. It'll be interesting to see if we can breach these levels, particularly with the GPI buying appearing to have reached its target. What we will need for the next move up is probably foreign investors to recognize the story of Japan and begin buying again.
I mean, the Topics has experienced one of the more extraordinary moves, I think, that we've seen in the last few years. And the market's been up over 20% just since the beginning of September and up over 50% since the lows back in 2015. So it's been a big move, and it's come amidst, I think, a big cloud of uncertainty and skepticism, I think, amongst the broader public. And many people have really come to question whether is this move legitimate and can it last? Does it have any sort of duration, or are we really doomed to fail, and is the market going to pull back?
Well, I think for us to take out key technical resistance, you have to ask yourself, who are the next incremental buyers that are going to push us through there, right? We mentioned before that foreigners have been absent from the market for the better part of 3 years. To be sure, a revisiting Japan trade by the foreigners would absolutely take us through, given that they've been absent.
Yeah, so if you look back really since the early 90s, I mean, the Topics has made highs anywhere from 1650 to 1800, about 5 separate occasions going back since the mid-90s. And so it's interesting that not only have we just surpassed the highs from 2015, but also those highs from 2007 and 2000, and even in the mid-90s. So it's really carved out what myself as a technician would call a longer-term bullish base, where the market literally is just starting to emerge out of this base after a very lengthy period of consolidation. So from my perspective, on an intermediate term basis, it is quite bullish to have a move of this sort take place, because we've exceeded these former highs and it has quite a bit of momentum, but yet we're still over 40% off the highs that were made back in 1989. So it's still quite a bit off those former all-time highs.
The other side of that is where are domestics. It's been discussed that the GPIF are basically at their weighting on equities. So there's concern that there may not be the same impetus there. if I'm right on domestic demand, you may see the BOJ start to pull back. I mean, we're talking longer term themes here against what are resistance levels that we're visiting presently. So I would say for us to get through, you'd need foreigners to come in and start buying. For us to get sustainably through, you're going to need to see just broad participation from all the different types of investors.
One of the largest concerns about Japan is their demographic profile. However, there's a school of thought that Japan might be reaching a demographic sweet spot, that with this shortage of workers, better quality, higher paying jobs might be created, basically creating a new middle class.
Demographics is a key topic. I mean, people always criticize me and say, oh, Jesper, how dare you be bullish on a country where in 300 years, only 11 people are going to be left, which is actually what happens if you extrapolate the current birth and death rate straight line. Now, 300 years, who the hell knows what's going to be happening there? What you care about as an investor, what you care about as an entrepreneur is the next 5 to 8 years. And over the next 5 to 8 years, Japan is in a demographic sweet spot. And what I mean by that is that because labor is in short supply, the number of university graduates is declining every year by about 30,000 kids. As a result of that, wages and employment conditions are improving very dramatically. This year, starting salaries for university graduates are up by more than 6%. 98% of university graduates, 98% of Japanese university graduates got a full-time job offer within 10 days of looking for one. So it's incredible. And of course, as this new middle class rises, you've got greater job security, you've got rising incomes. Because of the scarcity of labor, because of the demographics, more and more companies, leading companies like Toyota, like Hitachi, like fast retailing, are rehiring part-time employees on a full-time basis, and that kicks off a very powerful positive cycle. As a part-time worker, you have no access to the corporate bonus. So the moment I get rehired on a full-time basis, I do get access to the bonus, which in Japan is about 1/3 of your annual income.
Another topic for discussion in Japan has been how the workforce is changing. Japanese management seems to be more open to taking in women workers and more open to immigration. This could provide a boost to productivity and a bit of diversification that has long been absent in corporate Japan.
The cheapest commodity in Japan is Japanese labor. If we compare minimum wages around the world, we find that the minimum wage in Tokyo is $8.32 an hour. The minimum wage in Los Angeles is $15 an hour for companies with more than 26 employees. The minimum wage in Seattle is $15 an hour. Connecticut is $10 an hour, and so on. There are no G7 countries which have a minimum wage system in which the minimum wage is lower than that of Japan. So Japanese labor is relatively cheap. So Japan is actually a very good place to employ people on an international basis, particularly when you quality adjust the labor force. You have a relatively well-educated, relatively sophisticated labor force that is not resistant to the introduction of new technologies. But the combination of deflated wages domestically and a very, very low, finally, a reasonably priced yen is an unbeatable combination, and that will, in due course, excite attention from international business and from domestic business.
Womenomics is a huge force in Japan, and Prime Minister Abe deserves a lot of credit for changing the overall environment, for changing the overall culture here in Japan, because let's be honest, Japan is a very male-dominant society, particularly in the workplace. And what you've seen is that now more and more companies are hiring females, not just for lower jobs, but also for executive jobs. You see that the female participation rate in Japan has increased very dramatically and is now actually above the female participation rate we've got in the United States of America. So this if you ask me over the last 5 years, what has actually changed? One huge change has been the increased participation of females in the workforce, including in the executive suite level.
The data that I'm most encouraged by in Japan right now is productivity. So the productivity gains that we're seeing in Japan are outstripping those that we're seeing in other developed markets, which is very encouraging. You know, the fact that that's occurring alongside wages starting to rise is exactly what you'd want to see. So if labor markets in Japan are tightening to the point where we're starting to see wages turn up alongside the productivity improvements, you know, those are, you know, the sort of green shoots that the BOJ wants to see. I think it's the reason to be bullish on Japanese shares if you're looking for relative outperformance.
Innovation is, of course, the big focus. And, you know, there are people critical of Japan and says, oh my God, Japan hasn't invented anything since the Sony Walkman. Well, that's actually not true. Look at the car industry. Lexus, you know, is obviously, you know, one of the super brands that has come out of nowhere and is now competing, you know, at the very, very top end of the luxury food chain here. One way of looking at that is, you know, when you look at research and development as a share in GDP, Japan is at almost 4%, which is one of the highest in the world. When you need to build a railway, when you need to build a ship, when you want to have the best tire in the world, you have to go to a Japanese company.
So we've painted a very rosy picture of Japan, both on the macro and the micro level. But there must be issues, there must be concerns.
Japan's debt situation, right? We all know that they will never be able to repay 1.1 quadrillion yen of debt.
We know that the debt market in particular is still about 240% of GDP, and many people would argue it's out of control.
You know, the idea of debt, it's a yawning problem. 250% of GDP is a concern. Going back throughout our whole career, it's been a concern, and a concern for really anybody involved in those assets, whether it's, you know, hedge funds who are participating in a shorter term horizon, or even when I was a reserve manager at a central bank.
So the question is, what would happen if they said to the Ministry of Finance, look, we don't need to get this money back.
But let's just say you wake up one day and the BOJ has 75-80% of all the outstanding government bonds. There's no inflation. There's a little ceremony out on the Imperial Palace grounds. Minister of Finance, you know, dressed in his full regalia of kimono and samurai sword, and the Bank of Japan governor facing him in the same outfit, and they bow to each other and shake hands. And it's announced that the Ministry of Finance does not owe the Bank of Japan any funds for the repayment of the bonds that it's purchased.
I'm not concerned about the JGB market. I don't think the market is likely to come to a head. I think you're likely to see an elegant exit via continued reflation in Japan. So, you know, the idea of debt cancellation in Japan is not something that I'd be considering anytime soon.
I think there are a couple of things that can go wrong, right? And, you know, the first one is international. And, you know, international, you obviously have got, you know, the dependency on the United States is still very large. I mean, a full 25% of the profits of Japanese companies come from exporting or producing in the United States.
If we look at what would have happened if only the Japanese economy had grown at the rate of 1% in nominal terms for the last 20 years, there would be roughly 125 trillion yen more economic activity in nominal terms in the country than there is. And that 125 trillion yen is close to 40% of current GDP. So you can see how much GDP has disappeared as a result of deflation.
The second, more structural issue is the question over the People's Republic of China. And in particular, it is about the currency outlook, the currency policy of the People's Republic of China. If, God forbid, the People's Republic of China were to decide to devalue its currency dramatically by 10 or 15 or 20%, that would be a huge shock to the Japanese system.
So I think we have accomplished that breakout, but I would argue that near term, the level right up near 2000 is going to be pretty formidable resistance for the topics. So we have gotten very overbought using many of the various technical metrics that many people would look at, be it RSI, stochastics, and we've gotten to levels that really haven't ever been seen in the topic. So on one hand, that's a good sign to come from a very long, low base and move to overbought territory very quickly. But in the near term, it means we likely have to consolidate those gains. So I would say that in the next 3 to 6 months, I'm not as optimistic. I think likely that we're going to consolidate and pull back.
So after 20 years of false starts in Japan, is this now the time to invest in Japanese asset markets? It appears for the first time in many, many years that both the macro and the micro are working together. The macro environment seems very stable with monetary policy and fiscal policy relatively loose. The corporate story also seems to be more and more compelling, completely in sectors, or particularly in sectors of technology, robotics, semiconductors, and autos. The Japanese market has been underinvested for many, many years. On a valuation basis, it is interesting both on a price to book value as well as on a PE value, and could potentially offer better earnings growth.
The exciting new development is the small and medium-sized capitalized market. So the small and mid-cap market in Japan has been on a structural upward trend, and that is because the domestic economy is now gaining traction. You've got a record low unemployment rate, you've got rising incomes, and you've got rising incomes in Japan for the first time in one generation.
There's an awful lot of discussion of the age structure of Japanese society. There's much less discussion of the age of physical infrastructure in Japan and the necessity of maintaining that physical infrastructure in order that it should be operated safely. Roughly speaking, 50 years after a country puts in a great deal of infrastructure, there is an echo boom characterized by repair and replacement, maintenance of the existing infrastructure. So that's one of the areas in which we're finding a great deal of opportunity at the moment.
The Brookings Institute study show roughly 140 to 150 million new entrants to the global middle class every year. 88% of them are coming from Asia. So this is a very compelling secular macroeconomic theme to examine and then try to figure out what type of trades and positions are going to fall out. So much of that consumption is being driven by China, but the proof is in the price action, and the price action is telling us it's this intra-regional growth that investors should be excited about.
I think that likely we can get up to a level right near 3,000, so we're at 1,900 now. So I think that really on any pullback whatsoever, that would really be used to buy, that we're still going to see a lot of momentum acceleration and upward trajectory.
I think for the first time in many years, we're seeing a stable macro environment and a corporate environment where Japanese companies are regaining momentum. They're regaining technological expertise, they're regaining the ability to compete on global markets, and there seems to be a change in corporate management in terms of share buybacks, dividends, and in terms of increasing productivity within their companies.
So I'm strongly committed to the view that Japan is not deformed, therefore does not require reform. All that is required is the absence of the type of policy errors which have characterized the last 30 years.
So if labor markets in Japan are tightening to the point where we're starting to see wages turn up alongside the productivity improvements, those are the sort of green shoots that the BOJ wants to see.
On a medium-term basis, I still view this as being one of the more bullish and really one of the more exciting moves that we've seen in recent years that I think has the potential to continue.
I think that the big surprise in 2018 is going to be the Japanese economy growing at 3%.
Thank you for watching this interview. This is just a taste of what we do at Real Vision. To learn more about the complex world of finance, business, and the global economy, click on the membership link in the description. Give us 7 days to change your life. This will be the best dollar you ever invest.